Hey guys, good morning. I hope you're doing well. I hope you had a great evening. Good morning so far. And ready for another day, which should be interesting. Uh, Maybe some give back wouldn't be bad. Um, Market can go up forever, right? All right, let's just wait 30 seconds and then we'll start this session. All right, let's start this. All right, so let's get ready for very boring Alex. Uh, that's my game plan from here. I shared a lot of why um, last night in the report, but also during the day as I was updating with my trimming, etc., etc. So, all right, guys, it has been a crazy month. Uh, and as usual, all right, I'm never the guy that will call a pullback, a top, or calling anything to the downside in an uptrend. All right, uh, but I think that yesterday we started to see some reasons to at least get more defensive to protect the gains and to wait patiently that the market gives us another opportunity. All right. Uh, so price trade up. All right. If we want to keep that simple, price is above a rising 21-day move structure. Right. So the trend is up. Uh, we remain long focused. All right. That doesn't change. Uh, that comes back. That price is historically extended, something that we even didn't see in COVID recovery and in the late 90s. All right, let's call it this way instead of a bubble. All right, I'm not going to call that market a bubble. Um, that's for sure. All right, but what we started to see yesterday, and I remember we talked about it probably in the last two EMS sessions, is breadth peaked on April 17, all right? And Brett contracted, and for the last few days, we're talking about it. Is it, there was two scenarios, right? Either that Brett contracted, all right, and we could see a shift in the trend, even more momentum, even more melt up, as there is room breadth wise to reconfirm the trend of breadth and go overbought. All right. Or the second option was maybe that's a divergence starting to build up. All right. That was also something that we discussed. Um, and from yesterday's action, I'm leaning more and more um, to the second option. All right. We are building lower highs since that April 17. So that high was made, lower high, and now we make a new lower low on the breadth extension. We also have the McClellan summation hooking down. All right. When you get price, keep making new highs. And I remember we discussed that yesterday. What it means is there's less and less participation. The rally and the trend is getting thinner. Um, there's only half the stocks right now that are trading above their 10, their 5, their 10, their 21 and 50 DMA. Uh, so that's the picture. And usually when I see the McClellan summation hook down like this, what it means is uh, on the margin, bread starting to contract. All right. We also have MCO new low. We're not oversold yet. And yesterday, if we continue with that gap down, we continue to contract and see a red day, then it could mean that the McClellan summation is hooking down below the 10 DMA and confirming that bread contraction regime started. All right. Yesterday was the first pullback signal on QQQE as well. So that's to be noted. So that's the first divergence. The other divergence that we saw was that yesterday, let me use this one. Yesterday we had a divergence on the internals as well. And listen to me carefully. That's some divergence. That's action below the declining 21 day structure. So it's not a sell signal. What it means was that clues were starting to stack up, right? Just one in isolation doesn't mean a lot. But when you see Brett having that divergence with the McClellan summation hooking down, when you get credit spreads with that divergence as well, credit spreads was up, all right? The VIX was up as well with the market making a new high. Uh, Bitcoin is not confirming that divergence, but credit spreads and VIX does. Give me just 1 minute. All right, sorry. So it just means that internals and Brett is starting to tell us a story, right? Uh, and that story just becomes because the market is extended, right? Price making new highs, but it was like 4 times ATR from the 21 EMA and even more from the 50 DMA, around 8 times. So you just take all that into account into your scenario building machine, right? And it comes with experience and knowing what to look for. And for me, yesterday, that was a reason to trim more. All right. I wanted to get off margin. I wanted to uh, close all my new exposure risk, because if a position is not working and too close to my stop loss, and I don't have the cushion to weather a pullback, uh, then if it doesn't work for the last month, um, then chances are that it won't work when the market goes into a potential pullback. All right, so that was the reason for closing new exposure risk as well. So does it mean that we're going into a long pullback, into a correction, into a crash, or we make a new high, or we make a 1 2 day shakeout? Listen, I don't know. I'm not here to speculate. I'm not here to guess what will happen. If you know me, that's not how I operate as well. Um, so what I do know, all right, so price is above a rising 21 DME structure. Uh, Internals are still below their declining 21 DME structure, and liquid leaders are still acting very, very good. Um, so from now, I'm just being a bit more defensive, chilling with the exposure that I have, and I want to see more information. All right. I'm in a gathering information kind of phase where I want to know how that gap down is bought. All right. Is it a 1 day affair, a couple days affair? When we'll have, and if we have the McClellan oscillator showing oversold readings, bread extension being oversold as well, then if we have liquid leaders set up at around the 21 DME structure, then it will be time to re-engage. All right. But just considering the market extension, I'm leaning more towards uh, more than when more than 1 or 2 day uh, digestion. All right. But that's just pure guessing on my part. That's how I will personally play this. And I have the good game because I have my exposure. I have very good cushion, so I'm ready to wait and weather the volatility. All right. Uh, all right. So let's look at. That's where I wanted to use this one. All right. Something that we'll add to Teams Lab. Very nice. Look at that. I'll be able to filter for my liquid leaders universe. All right. Um, so a lot of stocks went yesterday, right? And that's usually what you see. And then either that we melt up and we just go from here, and that weakness is bought super quickly, or that's kind of the strength, and they will start to build the handle and pull back a bit to retest their base area or their structure as well. So not a lot of setups in the liquid layers, to be honest, and kind of uh, confirming that the market ran hard yesterday and probably due for some more digestion. So you have oil and gas still setting up. Maybe that's the trade, but I'm not really too a fan of playing oil and gas. CLS, it needs to hold a 21 day structure, but again, if the market goes into a pullback, that's kind of the first names that will break their structure and will be there when they are reclaiming their structure a bit later. Onto, yeah, I want to see that tighten up. That's probably my position most as at risk because I don't have a lot of cushion. But as long as it holds the structure, it's holding. It's looking good, and I want to be patient. All right. Oil and gas, tankers, um, core weaves. I closed that yesterday again. If the market pulls back, then I don't want to be caught in that structure breakdown. Uh, SQM, so battery materials, that's a bit out of buy area, but could set up a higher low. Oil and gas, HVAC, not a fan. Oil and gas, MP setting up. So that's if that's a name that you're looking at. We're still building an entry in the rising 21 DME structure. So that's a name that you can look for. Maybe an inside day, playing an inside day here. That could be a good name if the market wants to rotate out of tech and into other type of sectors and groups. GV still setting up. I don't know if it can buck the trend, the market trend. Um, but confirmed daily reversal yesterday. I was able to de-risk my had. Um, and yet it still looks very good. We had that base breakout, so this is basically the first 21 EMA pullback since that base breakout. You have ETN as well in the same team, setting up, and SEI. Um, yeah, the rest is just not leading, to be honest. Maybe ENTG setting up in advanced material, but that's a group pretty extended. So, like you see, a lot of oil and gas setting up, not a lot of semis, not a lot of tech. They went hard yesterday. All the photonics went hard, so light, AOI, core, laser. So that was the big trade, right? That was the big trade. Um, that is trying to reverse the trend as well. But yeah, that was the big trade. Photonics. I hope you caught some. And if not, then just like I said, there's not a lot setting up, so it really means patience, right? If bread starting to break down, if we start to see divergence in the market internal, especially if we see credit spreads reclaiming the 21 DME structure, then it's really time to sit tight. All right, so that's about it, guys. Like I said, I don't plan to re-engage today. Um, in the back of my mind, just considering the market extension, I'm ready to weather couple days, week pullback if it happens, if it confirms. Otherwise, we'll take it day by day. We assess how this weakness gets bought. Maybe we make a new high. You never know. All right. I'm not locking myself in the we have to pull back camp. All right. The market proved us that it's incredibly and historically strong. So anything can happen, but at the same time, we just had a crazy run. So don't get greedy. Protect your gains. That's the most important, right? So lock some into strength, raise your stops, and get off margin. All right. And even if the market makes a new high, I'm not buying anything. I'm just for the next few days. If we pull back, I'm patient with my exposure. And if we make a new high, I'm patient with my exposure. All right. The only thing that I would like to see to re-engage is a couple days digestion, price getting closer to the 21 DMA structure on QQQE, and we get the McClellan oscillator oversold, and we get some type of spike and rejection on credit spreads. That would be my setup to re-engage, add to my cores, and go back into margin. Until then, patience, panda, and we just wait. Any questions, guys? Two options. It was either very clear or I've put everyone to sleep. I hope it's the first option. All clear. Excellent. So guys, have a good day. If like me, you already trim, you already reduce your exposure, then just be patient. Whatever the market makes a new high, and prove everyone waiting for a pullback wrong, or we go into a pullback. So both scenario are still on the table. It's time to be patient. All right, you can have stocks in your portfolio that just buck the trend and continue. It's not a reason to sell. All right, we've worked really hard in the last few weeks to build that cushion to be able to weather uh, a longer pullback if it happens. So we have the equity cushion, we have the stocks cushion, we trim that help that cushion as well. So now let's be patient. All right, let's see where this market goes. All right, have a good day, everyone. Take care. Cheers. Bye bye.